Have you ever wondered where you really stand financially compared to the average person? You might look at your paycheck, your savings, or even your debt, and think you're doing just fine, or maybe you feel like you're falling behind. But the truth is, once you look at the actual numbers, you realize just how shocking the financial life of the average person really is. Some of these statistics will open your eyes, some will leave you worried, and some might even give you a bit of relief. Stick with me until the very end, because I promise you, the final numbers I'll share could completely change how you look at your own money. Let's take a moment to consider the financial perspective of the typical individual today. As I analyze these figures, I encourage you to evaluate your own performance in relation to them. Evaluate your earnings, expenditures, savings, and liabilities. You might find that your financial situation is more favorable than you initially believed, or you could come to understand that adhering to conventional strategies carries greater risks than it appears. Let's begin with income, which serves as the cornerstone of your financial journey. The average full-time employee in the United States currently has an annual income exceeding $52,000. This translates to approximately $1,041 on a weekly basis, or around $26 per hour prior to tax deductions. Initially, this may not seem alarming, but the truth is that this figure has not kept pace with the rising cost of living. Although wages have gradually increased over the years, inflation has outpaced this growth. Essential expenses such as groceries, rent, healthcare, and transportation are increasingly consuming your paycheck at an alarming rate. Even if your earnings are at or above the median level, it does not necessarily indicate that you are financially secure. This leads us to the topic of spending. The typical household incurs annual expenses of approximately $67,000, indicating that the average family is outlying more than the income generated by a single median earner. Housing constitutes approximately 34% of the budget, translating to around $1,885 each month. When you factor in food expenses at approximately $691 per month and transportation costs around $913, you'll find that over half of the household income has already been allocated. The available funds are allocated across various essential expenses such as medical bills, utilities, insurance, clothing, and modest indulgences like dining out or entertainment. It's understandable that many individuals experience the challenge of living paycheck to paycheck, despite having what appears to be a satisfactory income on paper. Do subscribe to our channel and also press the like button to know more financial insights. Now, this is where the situation becomes increasingly worrisome: savings. Typically, individuals set aside approximately 6% of their earnings for savings. That amounts to approximately $3,000 annually based on an income of $50,000. To illustrate the point, just one unexpected car repair or medical emergency could deplete those savings in an instant. Moreover, we have yet to address important long-term objectives such as retirement planning or investment strategies. Many professionals in the field suggest that individuals should aim to save a minimum of 10 to 15% of their income specifically for retirement. However, the typical individual is saving less than half of that amount. When we examine retirement savings in detail, the figures can be quite concerning. Currently, the average retirement account balance in the United States stands at approximately $65,000. It's important to keep in mind that this applies to individuals who have retirement accounts. Nearly 1 in 4 adults has no savings set aside whatsoever. Consider the possibility of dedicating years to your career only to find yourself at retirement with minimal savings or assets. If an individual aims to retire on $65,000, applying the safe withdrawal rate of 4% would yield approximately $2,600 annually. That amounts to just over $200 each month, which is evidently insufficient to meet even the fundamental expenses. When examining retirement savings across different age groups, the figures remain concerning. Individuals in their 30s typically hold a median amount exceeding $14,000. Individuals in their 40s typically possess around $37,000 in savings, while those aged 65 and above, who are at retirement age, have a median balance of approximately $88,000. When you consider the recommended range of $500,000 to $1 million for a comfortable retirement, the disparity becomes clear. This is the reason many individuals find themselves relying significantly on Social Security. However, the typical Social Security benefit hovers around $1,550 per month, which for numerous individuals is insufficient to adequately cover housing or medical expenses. Moreover, the situation becomes even more concerning when we consider the implications of debt. Many households are currently managing an average credit card debt exceeding $9,200. With interest rates frequently exceeding 20%, this translates to significant annual interest payments, funds that could have been preserved, invested, or allocated towards wealth accumulation. Additionally, numerous individuals are managing student loans, car loans, and mortgages, which can lead to a tight financial situation. It is particularly troubling that a significant portion of this debt is not being allocated to assets that appreciate in value. Rather, it is linked to consumer expenditures, items that depreciate in value the instant they are acquired. Now let's discuss net worth, the definitive indicator of your financial well-being. The typical household net worth in the United States stands at approximately $122,000. However, that figure can be somewhat deceptive, as it encompasses home equity and various assets that individuals cannot readily liquidate for spending purposes. For households below the age of 35, the median net worth stands at less than $14,000. This amount is insufficient to sustain you for more than a few months, particularly in the event of an emergency or job loss. For individuals approaching retirement, the financial outlook remains concerning when you take into account years of labor and the expenses associated with retirement living. It's important to recognize that many individuals are just one financial challenge away from experiencing significant difficulties. Unexpected expenses such as a medical bill, job loss, or economic downturn can quickly deplete years of hard-earned savings. This goes beyond financial matters. It's fundamentally about achieving tranquility and security in your life. Experiencing a lifestyle that operates on the brink can lead to significant stress, heightened tension, and restless nights for countless individuals on a daily basis. What implications does this have for your financial situation? If you notice that your income, savings, or net worth exceeds the average, it's an indication that you're making progress. However, it's important to remain vigilant and not become complacent. Leverage these figures as a catalyst to drive your progress forward. Should you find yourself lagging, it's important not to allow the statistics to dishearten you. Instead, allow them to act as a catalyst for awareness. Begin by setting aside a bit more than what most individuals typically save. Establish a reserve for unexpected expenses. Avoid accumulating high-interest debt, and consistently enhance your retirement savings. Achieving success doesn't require extraordinary abilities. It simply involves steering clear of the habits of the average individual. The figures I've presented today are not intended to alarm you, but rather to provide clarity and insight. Following the conventional route will yield conventional outcomes, and in the current landscape, conventional simply won't suffice. Achieving true financial security involves making informed decisions, establishing consistent habits, and striving for excellence beyond the typical approaches to managing money. Here's a task for you. Take a close look at your financial situation, your income, your expenses, your savings, and your debt, and evaluate them against these benchmarks with complete honesty. Now, watch the video appearing on the right side to know if you could really retire by investing $1,000 each month for 10 years. Also, subscribe to our channel to help us complete our goal of 11,000 subscribers.